Another big CNBC exclusive. We sat down in Houston with the Devon Energy CEO, David Hager. We talked about everything from the U.S. oil boom to where he thought crude prices were headed. But we also asked him about an important story that is only starting to come to light: why some companies in the Permian Basin have to sell their oil at a discount. Here's what he told us.
The growth has been so much, it's outpaced the growth in pipeline capacity out of the basin. So in order to get it moved out of the basin, you have to be willing to take a discount. And so that will be remedied, but in the short term, it's caused this differential, as we call it, to go up. But again, we anticipated that issue. We have a lot of long-haul capacity out straight to the Gulf Coast, and in the rest, we locked in our basis differential, as we call it, at WTI prices some time ago.
How much of your production is locked in for transportation?
90%. 90% of our oil out of the Permian is that differential is locked in.
Why didn't other companies see this coming? Because we've heard tales of companies, they're pulling oil out of the ground and they literally have nowhere to put it unless they're willing to accept a big discount.
Well, you probably need to talk to these other companies, but we look at other things. We look at things like this on a long-term basis. That's part of what we do as a company, and we think we do a pretty darn good job of it.
Are you cash flow positive at 50?
Yes.
So 70
essentially neutral with our capital spending plans.
Okay,
slightly positive.
Because you and I have chatted over the past couple of years, cash flow neutral, slightly positive at 50. So 70, is that pure excess cash flow for you? If we go to 75 or 80, is that just a pure win for Devon and its shareholders?
Well, it's absolutely a win. Now, at the same time, we have hedged some of our production at prices not far away from 50, so we're not getting...
52 is what I think I saw in your investor slides.
Yeah, something like that. Yeah. So we are seeing a benefit from the higher prices, but we do have about half of our production locked in at these at prices less than 70.
I know one of the things you've tried to do is obviously get your credit rating up. You want to continue to increase the credit profile of Devon Energy. If oil stays at 70, 75, maybe 65 for months or quarters, and tell me if you think it will, would that just benefit your chances of just ratcheting up that credit rating?
Oh, absolutely, because it would show that we're generating much stronger cash flow, and obviously that's got to be beneficial from a credit perspective.
Do you think oil is going to stay at these levels? I know we've been like this for years, Dave. I mean, your industry has to stop making news.
Well, we don't control that. There are a lot of different projections out there. I think that in the shorter term, I think it's very possible we do have some room to run, but I think the longer term, the question really is, how is Saudi and how is OPEC going to respond to the production cuts? Are they going to maintain those? How strong will the production growth be in the U.S.? And these are still some open questions out there that we don't know the long-term answer to. So we just make our investments based on what we think is a reasonable range of expectations and optimize our costs and get the most return we can given that.
Yeah, it's a big story right now in the Permian Basin that not a lot of people saw coming, which is there's so much oil that unless you've got a pipeline, a truck, or a train that is under contract to you, it is hard to get out. Kind of the black oil swan, if you will. Certainly a story to watch over the next couple of days and weeks.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.